Welcome back to the SBS podcast. I'm Coach Ryan. You can follow me on Instagram and YouTube at Ryan at Strategics. Building on the conversation yesterday where we talked about stewardship over income, I want to take it one step further today. Because once we learn how to manage our money, the next question becomes, what are we building? And this is where we have to get a better understanding of assets. Let me break this down in as very simple language as I possibly can. In accounting, we follow a basic formula. Assets equal liabilities plus owner's equity. Don't let that scare you. It's not that complicated. Assets are what you own that can quickly be converted into cash. Cash in your bank account, investments, property, businesses, equipment that makes money. Anything that holds value and can be converted into money. Liabilities are what you owe. Car loans, student loans, credit cards, mortgages, and personal debt, to name a few. Owner's equity, that's your net worth. It's what's left over if you sold everything you own and paid off everything you owe. That's it. Assets, liabilities, net worth. Now here's where we have to slow down. Not everything that we own is an asset. Some things that we own are depreciating. That just means they lose value over time. Cars, they usually depreciate. Clothes depreciate. Electronics depreciate. What that means is if you bought something for $1,000 today, next year it might be worth $500. That's depreciation. But an appreciable asset increases in value over time. Real estate, profitable businesses, well-performing stocks, and other investments. You buy them and over time they grow. Now here's the bridge to our personal lives. We live in a culture that encourages liability behavior and we call it success. A new car, a bigger house than what we can actually afford, buying luxury items on credit. It looks like wealth, but when you apply the formula, it's just debt. Now, yesterday I said that the country runs, or a couple of days ago, I believe, I said that the country runs on debt, which is not an inaccurate statement. You just have to know how to leverage it. Assets increase your options, liabilities increase your pressure. That's the difference. If most of our income goes towards liabilities, we'll feel stuck. And if our income is building assets, we'll start feeling freedom and start building freedom. But it's not just about the money. And ironically, this applies in our personal lives. Think about your skills, your education, your discipline, your reputation, your network. Those are assets. They can produce opportunity. They can be converted into income. They can increase your value in the marketplace. But poor habits, undisciplined spending, unresolved anger, those are liabilities. They cost you. They reduce your capacity. They shrink your net worth financially and personally. The accounting formula doesn't just work in business. It works in life. What you own, what you owe, and what's left over. So here's the question. Are we building assets or are we collecting liabilities that look impressive? Economic mobility isn't about looking wealthy. It's about increasing our net worth. And increasing net worth definitely moves faster when you are getting assets versus liabilities. It's simple math. Yesterday we talked about stewardship, and today I'm telling you what your stewardship should produce. It should produce assets. Income pays the bills. Assets change your future. And if we want real economic mobility in our families and our communities, we have to shift our mindset. Stop asking, what can I buy? And start asking, will this build or reduce my net worth? Because once you understand assets, you'll stop chasing appearances. You start building positioning. And positioning is power. Yeah, there's nothing wrong with spoiling ourselves a little bit when we work hard. We should have nice things, but we have to know that net worth is a calculation of what we have minus what we owe. And the truth is, a lot of people are negative, and that's okay because we're going to climb out of it. The key to economic mobility is, honestly, what our net worth is. Even the word tells us to be the lender and not the borrower. Be smart. Think clear. Give yourself time before you make a decision. Stay locked in, y'all. We're going to keep on building this momentum. Every day, we're going to try something that we haven't done before. We're going to change the way we think. so that we can change the way our communities grow. Until next time, have a great weekend.
I'm feeling better than ever. Scratch that, better than better. Only live once. Can't be me. I'm living forever. Turn up the bass. I stay out of trouble. I'm walking with God and stomp on the devil. I had to follow the plan when I did not understand. Now I just feel like the man. Watch how I'm doing my dance. Bigger than me with your brand. All that I need is a chance. I pray that we see promised land. I know that